Well, I can't see anyone, so I guess we'll wait for a while if anyone wants to join the webinar. Those who are joining webinar, if you don't mind, maybe you could introduce yourself. Oh, hi there, Simone. Nice to meet you. But currently, attendee is still quite low, so let's wait for a few more people to join in before we start, so that I will not have to backtrack. Hi there, Cassandra. Nice to meet you. So while we wait for the other attendees, maybe you could chat a little. So where are you guys from? I'm from Singapore. Wow. So I have a fellow Singaporean, and wow, Simon, you're from UK, and hi, Pomegranate, you're from Poland.
Sorry, I'm gonna pause this. I don't know why. Oh, it's showing like this, like the comments.
Oh.
Can you try changing? Sorry guys, we're just gonna tweak this a little. We're gonna try to get everything on full screen. I'm not sure why. Careful, sorry.
Okay.
Not sure why the chat is at the side. It wasn't like this before. How do we get rid of this chat? Enter full screen? Nope. Disable. This chat box thingy is at the side.
Right.
Usually it's not there. So like we're not able to see the full screen. Maximize? Okay. Yeah, I guess just for today we have to continue with the chat at the side.
All right.
Okay.
Well, it's good that you can see what the other viewers are talking about. I think someone joined. Hi, Craigie. Hello. Hi, Craigie. So where are you from? Hi, Martha. If you don't mind, Martha, would you like to tell us where you're from? Hi, Craigie. I'm from Singapore. I see you're from Scotland. Oh, wow, London. Oh, you're from London. That's cool. I always wanted to visit London, actually. Hey, Jacob. Am I pronouncing it right? Jacob, right? Okay, sure, thanks. Hi, Musa. I see you're from France. I'm from Singapore. Hi, Raphael. You're from, sorry, I can't. Is that where you're from? Oh, okay. Cabo Verde. I'm sorry, I haven't heard of it, but nice to meet you and welcome to the webinar. Oh, it's Africa. Okay. All right then. Nice to meet you, Raphael from Africa. I'm from Singapore. I'll introduce myself later. Do you mind explaining what WLC is? I'm not good at acronyms, sorry. Oh, you can't hear me? Can the rest of you hear me? Do say yes if you can. All right, okay. Okay, that's great. Cass, maybe you can check your mic. I mean, check your headset, your headphones, or your speaker if you're using speakers. Oh, okay, sure. Oh, that's great. I wouldn't want you to miss this webinar. All right, guys, let's give it 2 more minutes and then let's start the lecture. Okay, guys, I think it's time for us to start. So today I'll be presenting about the trading strategy clinic. The first half will be presented by me, Joanne, and in the second half there will be another colleague of mine who is called Melanie. Who will come in and continue to talk about different kind of analysis of charts. So today date is the 26th of May, and this is a webinar by Vantage Markets. All right. So before I start, I have to talk about the disclaimer. So, the information, the context, and the opinions which are expressed in the presentation on the following slides are solely that of the presenter, which is me, and not necessarily those of Vantage, and are solely used for educational purpose, as they do not constitute investment advice and/or consultation on how a client should trade. So Vantage does not guarantee the accuracy or reliability of the information provided herein. So risk warning. So the trading margin FX and CFDs carry significant risk and it's not suitable for all investors. You could lose substantially more than your initial investment. When acquiring our derivative products, you have no entitlement, right, obligation to the underlying financial asset. You are kindly advised to read the relevant documents on our legal document page and seek independent advice to fully understand the risk before deciding to trade. Information is of general nature only and does not consider your financial objectives or personal circumstances. The responsibility for using and or relying on such opinions, materials, context lies with the client and Vantage accepts on responsibility for any loss, including without limitation to any loss of profits resulting directly or indirectly from reliance on such information. Attendees should note that sessions are audio recorded and may be published in various media, including print, audio, and video format without further notice. So there you have the name of the company and where it's from. All right, okay. So do follow us on social media. That is our Telegram at Vantage Markets, our Facebook at vantagemarket.global, our LinkedIn, Vantage Markets, Twitter at Vantage Markets, and our Instagram. All right, now let's move on to the charts. Oh, hi there, Bob. Let's go, Indy. Let's go. All right. Oops, sorry. Why can't I full screen this? Give me a while. Oh, okay. That's why full screen. All right, okay. Before I start, I'd like to ask this: do you have any requests or something, or do you want me to pick? Okay, Euro GBP then. Weird. Sorry, give me a while. Oh, it's futures no wonder. All right, let's start with Euro GBP. All right. So before let's start, I'd like to ask like a general question. So how many of you actually trade, or maybe you have some background on trading, like or you learn finance? I mean, you have learned in technical analysis and such before. Maybe a show of hand. Maybe like say yes if you have learned before. Okay, I see Bob has traded before, and Jacob is still learning. Okay, Pomegranate has still learning, but not Fibonacci. Yeah, I think we can cover that today. Craigie has been trading since October 2021. All right. Okay, Bob is still yes, but Bob's still learning. That's great. That's great. All right. I see. There's only quite a few people who actually have this relevant experience in trading and such. Well, we'll cover the high margin, you're asking what I'll be covering today. So I'll be covering the basic of trading. So I see that quite a number of people does not have really a solid background in trading. So maybe you can start from the basic, just to give a general, just to dispense the general information to the world. Oh, Simon has been trading, well, doing a challenge, but trading for a year. Okay, that's great. So I'll talk about the general basic, and those of you, if you think that you have some relevant information that you want to input into input into the webinar, do feel free to type it out in the chat, and maybe I can share it with the whole group. So that way we can all learn. I think only through a conversation can we acquire the most knowledge. Oh, Bob's asking what challenge Simon's doing. So Simon, what challenge are you doing? Oh, a Forex Fund challenge. Is it like a personal challenge, or is it like what do you call that? I don't know. Is it like a personal self improvement challenge, or is it like is it like an actual hosted competition kind of challenge thing? Oh. All right, that's very interesting, Simon. Good luck with your challenge. So, well, without further ado, let's start. So before let's start, this is this is trading view, and this is an example of a chart. So as requested, this is Euro GBP, and for now let's examine it closer. So what you can see is actually candlesticks. So you can candlesticks are like, it shows you the opening, the closing, the highs and lows of the forex, which is Euro GBP in this case. So let's look at the bullish candlestick. The most recent, the one of the recent ones. So this is our high over here. You can see my mouse, right? Those of you maybe can zoom in on your side, or maybe I should zoom in. Yeah, I zoom in. So here's the high, and here's the low. Okay, so when you see a bullish candlestick, bullish meaning green, so you can see that this is the closing and this is the opening. So this is an example of a bullish candlestick. Then now let's look at the inverse of it, which is the bearish candlestick. Now the bearish candlestick, well, luckily in this case, it's just right beside it. So in the bearish candlestick, so same thing, the highs and lows do not change. So the high is here and the low is here. Then the opening and closing are inverted this time. So in a bullish candlestick, the closing is here, the opening is here. In a bearish candlestick, the closing is here, the opening is here. So these are things you need to take note at the very start when you see the chart. Now you can now this is the, let's see. Now in trading view, so you can see the different timings for the chart. So there's like a 15 minutes, there's the 30 minutes, there's a 1 hour, there's a 2 hours, 3 hours, and 4 hours. I typically use the 4 hours. So let's use the 4 hours in this case. Now the first thing you want to go, you enter Majid, we're doing on the 4 hour chart. So the first thing you do when you see the chart is maybe you can look at the pattern of the chart. How is it flowing? Where is it trending? So some people, I noticed that some people maybe they have tough time finding out whether it's an uptrend or a downtrend or a chart. Uptrend meaning it's a bullish chart. Downtrend meaning it's a bearish chart. So what they like to do is basically they convert this to line. Because candlesticks are like, spread it out. It might be hard to understand, but line is it's much simpler. It kind of like, it shows you exactly where the movement is. The good thing about line is that it also makes it easier for you to, maybe you can plot out the trend line or channel. So maybe we can start by looking at the chart, and see whether you can find any trend line or channels. So at first glance, when you look at this chart, you can see that it's a uptrend, meaning it's a bullish channel. But this is only a very zoom in view. So sometimes the funny thing is, right, when I do my analysis, right, I do a very zoom in view sometimes, and then it's uptrend, it's a bullish thing. But when you zoom out, right, then you can see like it's not apparent in this case, because it's not. But you can see that it's actually like on the larger scale, it's a downtrend. So maybe you can take note of things like this before you start analyzing the charts. So, all right. Oh, Simon keep it simple with support and resistance key level. Yeah, that's good. That's good. Support resistance are definitely things that are essential. But with if you can keep it with trend lines and things, you can see additional levels of maybe support and additional levels of resistance. Support resistance alone or key levels, fixed levels are okay. But you can refine it further. So in this case, let's look at the chart to see if there's any channel or trend line. So this may not be apparent, so maybe you can like to test it out. Okay. So whether there is in this case or not, maybe I can also explain the trend lines and the channels. So the one thing I'd like to inform you guys is that in a trend line, it's very important that you have 3 points touching the trend line for it to be a valid trend line. So if you want to do a trend line of something bullish, it must come from the downwards of the charts. So meaning it can come by here. You cannot do a uptrend trend line on the above the charts. Between charts and candlestick chart, actually I usually like to do candlestick charts. Well, I mean, because the thing is, I'm more experienced with doing candlestick charts. But for those of you who can't see the the line properly, I believe that this is extremely helpful. Because this, I mean, you have been seeing this even without any finance training. You can actually see you can simply see the the movement at one glance. So right, so in this case, if we want to find you want to prove that this chart is bullish and has a trend line, we should come from the bottom. Meaning there has to be 3 points touching it. Maybe let's do this. So like 1 point, 2 point, and 3 point. So that's how you know it's a valid trend line. Conversely, if you want to show that it's a downtrend, maybe we could then you have be something like this. 1, 2, 3. Only then it will be a valid trend line. if there's like only two, oh, oops, my bad. It's only two, 1, 2, then it can't be a valid trend line. So what I like to do also is that I like to color my trend line green if it's bullish and red if it's bearish. It will make things more clearer if you're if that's what you're doing. So yes, so first you look for a trend. That's how you start out your that's how you start out first. So I mean, like, that's my answer to Bob's question. So so in this case, let's see whether there's any trend line for bullish movements. So you can see. There's a point touching here. Now, there is a point touching here, but the thing is, it cuts through the body. So for trend lines, it's okay to cut through the wick, but we can't cut through the body in order for the trend to be as accurate as possible. So if let's say we try to line this up, what I'm trying to do here is I'm seeing whether if I can make this touch. But it seems that we can't make it touch. In that case, let's move on to another trend indicating tool. If we can't use the trend line, we can use the parallel channel. So what are channels? So channels are basically it's a kind of confinement for your prices. So the important thing to note about a channel is that there might be 2 point touching on both sides, meaning a point has to be touching here, a point has to be touching on the other side, and another one, and another one. So notice 2 point on the top side, 2 point on the bottom side. Yes, I do like the channel too. So personally, I mean, like, I feel that channels are slightly better, more accurate than trend lines. And they are extremely useful tools in your technical analysis. So now all right, so another thing to note, the 2 points, right, it can go in any order. So let's say it can be up, up, down, down. This is still a valid trend line. Also, it can be also up, down, down, up. Obviously this thing must remain within the trend line. It cannot if it crosses the trend line. I mean if it crosses the channel, then it's not valid anymore. So this is for your bullish channel, and bearish would be downwards. So what I like to do is, if it's bullish again, I color it green, and if it's bearish, I color it red. Now Melanie will be taking over for the analysis. She'll continue on from channels.
Channels.
Right, I'm just talking about channels. We can continue on about the Euro GBP.
Sure.
All right.
Hi everyone. Hi, I'm going to be continuing from here on. Yeah, so today is Joanne's first time doing a webinar. So I'm going to be continuing from him. So I believe he's gone through the trend channels, correct? Okay, so let's analyze this chart together. So I can see a trend. Let's see if there's a trend channel first. Okay, not quite. Okay, so we can see over here there's a trend line. So I believe he's mentioned that for a valid trend line, we need 3 valid points, which means 3 swing highs, 3 significant swing highs. Okay, so, and also for trend line, we normally use green color. Okay. So now let's move on to our support and resistance lines. So typically for support and resistance lines, we look for the swing lows or the swing highs. So over here, I think I will place my swing high, my resistance here. And we can pull it back all the way here. Any questions so far? For the support, I think I'll place it over here. So for both the resistance and the support, we need to place it as close as possible to the current price over here. Everyone's okay so far? Okay, so now we'll back it up with Fibonacci levels. So I can see a Fibonacci projection over here. And typically for a Fibonacci projection, we use 61.8, 78.6, and 100%. And just from this one Fibonacci level alone, we can see that the 61.8% level matches up with our support level. Everyone okay so far? Okay, now we'll move on to the retracement. So similarly for retracement, there are a few levels that we normally use. There would be these 5 levels. Then we take a look and see what levels match up with our support and resistance or any of the swing highs or swing lows. So here you can see the 50% lines up with our support. Give the numbers for Fibonacci. So for projection, let me just show you again. We only use these 3 levels. We can use the 127.2 as well, but this one is quite weak. So we only use this one as like a supporting level. But normally we don't really use this. And then for retracement, we use these 5 levels. Everyone okay? Okay, so from here, do you think it is, do you have a bullish bias or a bearish bias? You can just let me know in the chat. What do you guys think? Okay, Bob says bullish because it's moving in an uptrend. Jakub says bullish as well. Pomegranate as well. I really like that fruit. Anyone thinks it's a bearish momentum? Simone says bullish as well. Yeah, so I think we can all agree that it is bullish because of the uptrend. It is also moving together with the ascending trend line. So now, let's find another support level. Bob says there is an ascending channel. Let's check it out. So for valid support channel, we need 2 swing highs and 2 significant swing lows to touch either side of the trend channel. So it doesn't seem like there is a trend channel over here. Yeah, so let's continue looking for the second support, which will be our stop loss. Okay, I think I'm going to put it over here. In line with the 61.8% Fibonacci retracement. Okay, let me clear some of the levels so it's clearer. Okay, so let's pull out some of the indicators to confirm our analysis. So there are a lot of indicators, as you can see over here, but the main 4 that we use would be the Ichimoku cloud, the MACD, Stochastic, and RSI. So let's start with Ichimoku first. So normally we only use the cloud. So you can see price is moving upwards above the cloud. So this supports our bullish bias that price will move upwards. And for MACD, we can see that there is a red area over here. So the red area represents a bearish pressure. So this does not support our bullish bias. Okay, let's do RSI next. So for RSI, we typically like to look at the levels, see if we can identify any trend lines within the levels. Yep, so Bob says there's an ascending trend line over here, which lines up nicely with our analysis. So this also supports our bullish bias. So the last indicator we'll check would be stochastic. So for stochastic, we like to use 21, 5, and 3. If you're wondering why 21, 5, and 3, it's just based on backtesting. These are the levels that we've realized are the most accurate. So this doesn't really support as well. Yeah, no trend line. So we can remove this. So normally, for full confirmation of your analysis, we need at least 3 out of the 4 indicators that we've used so far to support whether you are bullish bias or bearish bias. But in this case, we've only managed to have 2 indicators, the Ichimoku and RSI, to confirm our bias. So always remember to back up your trade with fundamentals as well, and not just technical analysis. Okay, are there any questions? If not, we have about 15 minutes left. You can let me know if there are any other charts you'd like me to go through. Okay, so Bob has requested for gold, so we'll go through that now. So the first step, as mentioned by Joanne just now, would be to identify the trend by using a trend line or a trend channel. Okay, let me see if there is an uptrend as well. Okay, yeah, so let's stick with the uptrend since it's closer to current price. So normally for when you identify a trend line, you can try and see whether you can identify a trend channel as well. Because if you use trend channel, you can kind of predict where price would be moving. Because normally price would move within the channel. Okay, so you can see over here, this is our uptrend channel. And then price has recently broken out of the channel. So now let's identify our support and resistance lines. I think support can be here because it's an overlap support and price is currently at the support level. Okay, so resistance normally has to be closest to your current price. But since we can pull it back as far as possible, we will do that. So now, since it has broken the channel, we will call for a sell since price is no longer moving in the uptrend. Okay, now let's pull out our Fibonacci levels to support our analysis. So there's a nice retracement over here. So we can see the 38.2% Fibonacci retracement is in line with our resistance level. And then let's see if we can get a projection over here. So since we're calling for a sell, let's try and identify another support level, which will be our take profit. Okay, any questions so far? Okay, since we are calling for a sell and the Ichimoku cloud is below price movement, so we can get rid of the Ichimoku indicator since it doesn't support our bearish bias. So let's try MACD. So because of the red area over here, MACD suggests that there is bearish pressure and it supports our bearish bias. So we are predicting that price will drop from this level to this level. So we want to keep our charts as clean as possible. So once we've identified levels that match up with the resistance and the support, we can get rid of all the other levels. Everyone okay so far? So now we can pull out another indicator. RSI isn't really telling us anything over here. There is a downward trend showing on our stochastics. So we can use that as well. Any questions so far? I'm just reading through some of the chats. Oh wow, we have a lot of people from the UK. Okay, so if there's no other questions, we have about 7 more minutes. Is there anything else you'd like me to go through? Okay, so remember to always clear all indicators and any drawings from your chart before you start. So first things first, we identify the trend line. You can see price has broken out of the trend line. For support and resistance, our support will be at the lowest swing low and the nearest swing high. So price has recently reversed off of our support level over here. So I think we can all agree that we all have a bullish bias for this chart. Okay, let's pull out our Fibonacci levels. So for Fibonacci retracement, we normally like to look for levels, for the highest levels. Okay, in this case, I will just stick with this one. Because from here, it doesn't really follow the shape of the charts. And it's a bit too far back already. Okay, I can see a Fibonacci projection. And we can see a confluence area over here already. Can you guys see that? So a confluence area is basically when two or more Fibonacci levels line up. So it means that there is a high chance of reversal from this area because there's a lot of pressure in this area. Let's pull out some indicators. Okay, so Ichimoku cloud is above current price movement. So it's bearish, doesn't support our bullish bias. So we can remove that. For MACD, it shows green area, which means that there's bullish pressure over here. So we can use this. And for RSI, it's not really telling us anything at the moment. So we don't have to use that. Let's try Stochastic. There is upward movement for Stochastic, so we can use this as well. And because we are calling for a buy, you can identify another level of resistance. Maybe over here, we have an overlap resistance in line with the 61.8% Fibonacci projection. Any questions so far? I'll just clear some of these levels so it's clearer for you to see. So these are the levels that are in line with our resistance and support. Of course, the best would be if you can get 3 or more indicators to line up with your analysis, but sometimes it just doesn't work out. Yeah. Any last minute burning questions you'd like to ask? We have about 1 more minute. Okay, if there's nothing else, thank you guys so much for joining us today. We hope you learned something, and we'll see you guys in our next webinar. Bye!